Good morning, traders, and welcome to the morning update on Wednesday the 13th of April. My name's Mark Owen, and let's just say what an interesting day yesterday was in the markets. We had full swings up and down, dollar sell-off, dollar rally, followed by a dollar sell-off again to find some support. Now, I don't know how you managed in the markets yesterday, so I'd be interested to hear from a lot of you who watch the channel and any new followers how you actually dealt with yesterday's volatility. For us at Phoenix Blue, obviously we always have our trades planned well in advance and we know what we're doing. But sometimes the market can catch us a little bit unaware, and what I mean by that is we like to have our orders and our preferences placed, but sometimes when you can have a huge move, and if it's all one direction on one particular market, I found that yesterday at one point all of my trades basically triggered within about a minute or two of each other. So then this is where you have to be, if you want to be a full-time trader, you have to be aware of what is actually happening in a market at any given point. And I only actually like to have an amount of risk in the market, or equity at risk in the market at any given point. So unfortunately for me, quite a few trades triggered. So what I had to do was manually shut down proportionally parts of some trades, and then what I did do was actually I closed my cable trade due to a news announcement. So I thought, well, I'll close that. It was 2 or 3 pips down. I'll close that. There's no loss. Funny enough, that would have been a huge winner for the day. It would have been very close to my stop loss, but in the end it came back down and sank. But these are the calls we make at the time, and I felt that that was the most, let's say, it was the one that was likely to give me the least heart attack or the least grey hairs throughout that moment in time. So, like I said, we did have an interesting day yesterday. We took a loss on Aussie dollar, we took a loss on Kiwi dollar, but we took a winner on Euro to T1, and we took a winner on Swissy to T1. Both trades are still running and running very, very nicely, and we'll look at those markets shortly. Or I should say we'll look at the dollar index and the euro shortly. For all of those people and followers out there, traders out there, please take note of our social media on Instagram. If this is your first time to our YouTube channel, follow us on Instagram, because I did post on Instagram a chart of the dollar index anticipating the dollar move yesterday, of which potentially we might have found the support that we were talking about. But let's see how the week finishes, and let's see how next week starts. If you do have any questions about the content in this video, if you do have any questions about what we do at Phoenix Blue and how we look to increase your ability on how to trade the financial markets, then please drop your questions to info@phoenixblue.co.uk, and our website, fingers crossed guys, will be ready by the end of today. Okay, so the major news we've got coming out today, or I should say high impact news we've got, is retail sales from the US. And we've got the Bank of Canada talking about their rate decision at 0.5%. Will they increase or decrease? Well, the consensus or the expectation within the market is that they will keep it at 0.5%. Probably the rally or the increased price in oil will help on their decision here, because the strengthening of the Canadian dollar will have maybe influenced them somewhat. However, I can't see any change just yet. And then we've got the Bank of Canada press conference. So what we'll have a look at in the statement is what are they expecting for the Canadian dollar? How does Polos see the Canadian dollar? Is it overvalued, undervalued? What's the state of the economy? So we're going to look for any key phrases that might change in this statement to his previous statement to show us what we can expect for the Canadian dollar in coming weeks and months. Okay, so let's have a look at what happened overnight. So the Nikkei 225, what you'll see, yesterday's close was here, and then we've had a huge gap up and a huge bullish candle overnight through Japan. So that's signaling good stuff there for the Nikkei. Now, what would we expect with this? Looking at the market, we've got to say it's at least going to test 1677 basically, the red line we've got drawn in there. And then if we are going to trade this market, we've got to think about what are we doing. Okay, so the consensus would be looking for shorts, looking at the channel that we've got drawn here. but obviously there's the talk of intervention and other things, etc., etc. So depending on how conservative or how risk averse you are, depending what price action signal or what comes up in this zone here, this could give you a potential trade to look to the downside, or if you're looking and you believe there's going to be intervention to stimulate the Japanese economy, then what we'll be saying is, right, ideally you want to be looking for a break above, close above, and then look to take advantage of the next market move. So dollar yen, what we can see is the market clearly broke through all major support that we talked about. Our key level was around here, 110s, 110.30 once it broke, which was the previous highs over here. So we had a clear move down. Now we're just being patient, sitting on the sidelines. We do believe that the market should see further downside. We're happy to be proven wrong. We're waiting for a pullback, which will coincide with the Nikkei rallying up to that previous resistance level, and then we'd expect to see further downside. However, we must always have our plan of action should the opposite occur. Okay, the DX. So I posted this chart yesterday before this candle here. Okay, so if you follow us on Instagram, you'll see what I posted and why I posted it. So we're predicting that potentially we're going to see some dollar bulls come into the market, and not only just by looking at the dollar index at a level, if you actually went through all the majors and the minors, they were all sitting on pretty decent major levels. This was something that you could say was a little bit of a clue. If you go back through our earlier videos and posts on Instagram, you'll see that something similar like this happened with the Japanese yen a few months ago, and I called yen then because euro yen, pound yen, CAD yen, Aussie yen, dollar yen were all sitting on levels. So this was the call for me to take a yen trade long on a couple of time frames. So on a couple of currencies, sorry. So I saw the same setup here, but it was dollar based, not yen based. And yes, we did get the move initially, but then unfortunately there was that big sell-off in the afternoon after the huge rally, and then it looks like the dollar bulls are back so far for this morning. So let's see what happens throughout the rest of the week. If you are conservative and you do like to see more confirmation, then just either drop down time frames or wait for a break of a previous high and look to trade the first high or low, something like that. Okay, euro dollar, well, we posted this chart again on Instagram. We can see it's moving quite nicely. You can see entry and stop loss. There's no risk in the market. This particular trade was one of the winners that hit T1 yesterday, and it's moving on nicely. You can see where our T2 target is down here. If you got any questions on how we do use fundamentals, how we do use technicals, and you would like to register to show interest in one of our programs, then please drop us an email at info@phoenixblue.co.uk. The analysis that I've just shown you there is from our Pure system. It's called Pure Analysis. This is based on clean charts, levels derived from price action, no lagging indicators. We buy and sell with banks and commercials, i.e. the market movers. These guys own 60% of the market. We trade with a fundamental bias, whether that's from interest rates, inflation, manufacturing, depending what drives each economy. We use commitment of traders analysis, which are independent signals. On average in Forex, we'll look at a 40 pip stop loss. Now, if this kind of trading style sounds of interest to you, like I said, please drop us an email at info@phoenixblue.co.uk. Okay, guys, listen, have a great trading day. Enjoy the rest of the week. We'll see you bright and early tomorrow morning. And sorry that this video has been uploaded slightly late. Okay, bye-bye.